You are waiting for the election to buy a house or make a decision about if it's the right time to refinance. But why? I've previously broken this down. The relation to rates in the election is way more fiction than it is facts. Rates could certainly move between now and after the election, but if they do, it will be because of other factors not directly tied to the election. To be clear, this is not a political conversation or even a discussion about policy. My point is, you are waiting for something arbitrary that's not waiting for you. Don't make the mistake of thinking that the election is going to have direct consequences towards the housing market or interest rates. Let's say you bought a home in the last few years and your current interest rate is higher than market rates. You are curious about refinancing, but you think it's better to wait as interest rates are going to continue to come down. Let's break down an example of what this actually looks like and how much you save if you do continue to wait. In this example of a $500,000 loan with a current interest rate of 7.5%, options to refinance today will just leave the loan amount the same. But we'll look at a current rate of 6.125%. That monthly savings is approximately $458 a month. But you have a target rate instead of 3/8 lower, and you want to see rates get to 5.75% before you consider refinancing. Sure, there's additional benefit as you save an extra $120 a month. But let's say it takes you 12 months to get to that lower rate. By overpaying for 12 months at $458, you've actually cost yourself $5,496 by delaying refinancing. Your break even on that additional $120 in savings is 46 months. Let's say that you can get to that lower rate in only 6 months' time. Well, we can quickly do the math and tell you that even at half of that, and the cost of delaying at $2,748 still takes you 23 months to break even. So just what are interest rates going to do in 2025? Well, let's take a look at some of the leaders in the industry and their forecasts. We can see that even the most optimistic are slightly beneath 6%, with the lowest 5.86% from the National Association of Home Builders. These are all revised after the recent Fed rate cut. If this is you with an interest rate above 7%, you might want to take into consideration what the cost of delaying the opportunity for a lower rate is today. Is there a direct correlation between interest rates and mortgage applications? The answer is yes. Purchase mortgage applications are up on a year-over-year basis for the first time since 2021. That's right, a clear sign that demand is back and more buyers are entering the market. Lower mortgage interest rates have decreased mortgage payments by over 2.7%, and this is the largest drop we've seen in over 4 years. Increased affordability and a slight increase in inventory has buyers excited about this market, and that uptick in buyer demand will certainly be welcome news to home sellers.